But we're seeing more and more focus, even from the high net worth group, on alternatives. Is that the reason why?
The reason why is for high net worth and ultra high net worth individuals and institutions as well. Think about endowments and all those big institutions. They invest in them because they receive higher and outsized returns. Secondarily, they invest in them because of correlation. So correlation is, how do two things react together? Are they independent of one another? Do they move in tandem? When we build portfolios and when we're trying to find that nice, stable ride that we all want, you try to put together assets that are lowly correlated so that they're not all going up together or all going down together. Now, truth be told, when the markets really get rough and you have these big black swan events, things that shouldn't be correlated usually become highly correlated and they go up and down together. But if you think about public markets, stocks, so much of what's built in when you're watching CNBC or Fox Business, it's based on what people think about in the macro economy. What's going on with the trade tariff? What's going on in the Middle East? All of these potentially exogenous events are being factored into the price, which really have very little to do with whether or not Johnson & Johnson is going to sell more Band-Aids, right? I mean, really. There's some inelastic demand for that. The beautiful thing behind alternative investments, they're traditionally priced on fundamentals. It takes out a lot of the noise that really creates volatility in the market, and they get priced in a more transparent manner. What many people like and what I like about it is creates more stability. Investor psychology. We all know that we have a tendency to make poor decisions when the markets are high or the markets are low. The markets are low. Tariffs, Trump announced tariffs. Oh no, it's the end of the world. And I should raise some cash. Having the ability to go sell my Tesla, my Apple, my JP Morgan, I can do it in a second. But with my alternative investments, my private equity, I can't. And it helps protect me from my own bad decisions.
So you're saying that's actually a benefit, the illiquid nature
Yep.
of alternatives.
Well, it can be a pro and it can be a con.
Sure.
But I will say from an investor psychology standpoint, I think it's a pro. I know that I've done this for 30 plus years. I know that my gut, when things are bad, I'm like, oh, that's not good. But I also know that there hasn't been a period of time where we've had economic problems or woes. Look at 2000, look at 08, look at COVID. We've always marched on to higher highs. But yet often we make a decision thinking that there's going to be this straight line down that hasn't happened.